Bitcoin is trading at $57,000 at September 5th. So let's dive into the charts. Let's see what the monthly and the weekly charts are suggesting and which levels I'm personally watching now for the next few weeks for buying and selling and taking positions. Let's dive straight into it. So what we have here is the monthly chart of Bitcoin. We have had the monthly candle close at the end of August. Basically what we had, this candle here, you can see it's red, but we had this wick down to just about the 50-week moving average, about $49,000, and it pulled back all the way up. So it's not as super bearish due to the bulls just stepping in and pushing it back up, but it still did close red. Now, August and September historically are the worst months for price action and performance, so we can expect it to be a little bit boring. You can see over here when we look at the historic returns, August was minus 8.6%, which is pretty much in line for being a red August. During the red months, you can see it's usually single digits or low double digits, 11%, minus 13%, minus 4%, etc. Okay, so August was basically perfectly on par with historic performance. September, on average, is minus 4.67% and is red for the majority of the time, with some little exceptions here. But the red isn't too bad. You can see it's usually single digit percentages. Okay, so we're minus 3.57%. So it could suggest that we don't have much lower to go, but we might just be in for a boring September and a bunch of chop. Now, what that could mean here technically on the chart is you can see over here, this level has kind of been well respected. These previous highs haven't even been touched yet. And you can see this inefficiency or fair value gap. That was basically where the price pulled back into since March. So we've basically been in this corrective phase where since the new all-time high got hit, you can see that was in March, it basically just kind of slowly bleeding down in here. But I still think this is actually a bullish pattern. That is a corrective pattern here. You can say maybe it's a wedge, falling wedge that usually breaks to the upside. Can be a flag also, which some analysts like to say it's a bull flag, etc., etc. But usually these types of kind of grinding down patterns tend to be more corrective patterns that result in continuation of the initial trend leading into it. You can see it's different when there is a peak made like this. Usually what it does, it takes the liquidity, just goes above, and then it's a pretty sharp drop if the trend is reversed. This is usually a consolidation within a bullish trend that when it breaks out, it continues the uptrend and we should see new all-time highs. Combine that with the seasonality that we have where October and November and even the whole fourth quarter is typically bullish and green. That's setting us up for potentially October, November green. We have the US elections taking place in November, which means that, and that's also seasonally typically bullish for the markets. And then we've obviously had almost 6 months here of sideways consolidation. So basically, what does this mean? I think we could see potential just more chop sideways. You can see I showed you the September historic returns, so anywhere between 3 and 10%. So somewhere around this level is perfectly fine, which means we're probably just going to retest here, probably hang around for most of the month, and then hopefully in October start the move higher. October and November break out to new all-time highs. That is ideally what we're looking for. Now, the caveat is, of course, nobody knows the future, and while this might be an expectation and a probability, if the charts show us that other things are happening, basically invalidation of the bullish trend, then we have to listen to what those charts are saying, which means that where is this invalidation? Where do we decide is the bull trend over and when does it become bearish? Well, if we change this to the weekly chart, I think it's very simple to say that the 50-week moving average here is basically the invalidation for the bull trend. In the same way that it was in 2021, you can see after this big drop, we spent quite a few weeks here around this 50-week moving average, but we never really closed below it, and then we continued higher over here and made a new all-time high. Now we have the same thing here. At the beginning of August with that big drop down, we hit the 50-week moving average and bounced up off it. Now we're still chopping around here, which is very similar to 2021, and as long as we stay above this level, and that's currently about 53.5, okay, and yes, we can get a wick below it. As long as we don't get a weekly close below this 50-week moving average, this is, in my opinion, a consolidation that will still break out higher. But if things change, and who knows, there's always spanners that can be thrown into the wheel. Rate cuts, there's a decision on the 18th of September, and the expectation is that we are going to see a rate cut by the US Fed. And then we're going to have to wait and see what does that do, what effect does that have on the markets when we actually get it. For now, it's just talk, but when we actually get it, which effect will that have? So I would say this level right now is pretty key, 53. We don't want to get a weekly close below 53,000 at this point. If we do, then you can see over here what happened when we lost it. Let's make that a red arrow. You can see when we lost the 50-week moving average with a weekly close below, that was the start of the 2022 bear market. So we've been above this 50-week moving average since basically March of 2023. And that has been the whole run up so far. It needs to hold right over here, 53,000. So we can chop around here for a bit, that's fine. And we can wick below it, can wick to 50,000, that's fine. As long as we don't get a weekly close below it, then I'm looking for a continuation higher. Maybe even this month, maybe the rate cuts pump the whole markets. That's possible, or otherwise in October. We don't have too much time left for this consolidation, in my opinion. So a couple of weeks at most, maybe only 1 or 2 weeks until the rate cut is on September 17th, the decision. And if we lose it, well, with the weekly close, then it's possible we go a bunch lower. So let's see what the market is going to bring us. This is how I'm seeing the charts right now. It is bullish until invalidation, right? So if then, only if we get a weekly close below the 50-week moving average, then I turn more bearish. Until then, the trend is bullish, and the main thesis, the way I see it, is this is a consolidation in a bullish trend that will continue higher. Let me know what you think. Leave your thoughts in a comment below. Smash the like button, and if you aren't following the page yet, make sure to follow for more updates like this.